All right, guys, Silver 5150 here with a quick update on usdebtclock.org, right? Well, nobody was paying attention and nobody had anything to say about how high the stock market went. Today, our national debt in the United States went over $24 trillion. Nice and quiet, nobody noticed, right? Back when I was served during the Cold War in 1988, I remember we were approaching $1 trillion because we were at $995 billion. A lot of military spending and fighting the Cold War, doing Star Wars against the Russians, and everybody's freaking out because we were approaching $1 trillion back in 1988. Well, now we're over $24 trillion and climbing. And trust me, this amount that we're spending is a heck of a lot more amount than this amount right here that we're bringing in. All right? So just keep that in mind. Let's see how long they take to report that. United States national debt over $24 trillion as of today. Now, down here, we have something even more interesting going on for you stackers out there. We're always looking at the silver to dollar ratio and the gold to dollar ratio. And as you can see, gold has jumped over $18,000 per ounce as, recorded by the debt clock. Okay? And what does that mean? That means this is the year-over-year increase of U.S. M2 money supply divided by the yearly world production of gold. So it's dollars versus the amount of gold. It takes that many dollars to create an equivalent for the amount of gold that's available. And the same thing for silver. Silver at $2,173 an ounce. And what does that say? All right, on the debt clock, it says that amount, $2,173, is the year-over-year increase in the U.S. M2 money supply divided by the yearly world production of silver in ounces. Okay? All right. So that's pretty clear. And we can see that there's a lot of shenanigans going on with our $15 an ounce silver. If it's even that, I think it's like $15.20 or something. Anyway, now, even more to add to this is this paper to silver ratio and the paper to gold ratio right now. If you remember a few days ago, it was actually higher at 175 point something an ounce for silver, per ounce of silver, and it's like 89 paper ounces of gold to 1 ounce of physical gold. So what has happened is these numbers have dropped. This means the paper to silver ratio has dropped down and the paper to gold ratio has dropped down. Now, how does that happen? Now, the way it works is at the COMEX, the commodities exchange, you can buy gold or silver contracts. A silver contract, I think, consists of 5,000 ounces of silver. A gold contract, I think, consists of 100 ounces of gold. And when a person buys a contract, usually with leverage at the COMEX, they have the option to trade that contract in and out of the market to try to make more cash, or they can actually request to take delivery of the physical item because the COMEX, the Commodities Exchange, is supposed to have the physical bullion to sell them if they want it. Okay? So, if we're looking here and we see the paper to silver and paper to gold ratio has dropped, that means that people that were trading into the COMEX and probably doing paper trading has taken delivery at some point of some of the gold that's in the COMEX vaults. Now, if a contract is 5,000 ounces for silver and 100 ounces for gold, and just say a handful of contracts sold, just how much paper are we talking about if that much physical bullion can leave the shelves and it only affects the paper ratio that much? See what I'm saying? The paper thing is probably not even accurate. It's probably more paper than that, but it doesn't matter because here's the dollar to silver ratio and the dollar to gold ratio, and here are these paper contracts that, remember, are what? Let's go ahead and take a look down here at the definition. And the paper silver ratio is, hang on a second. Paper silver ratio is the number of paper silver ounces traded on the world major silver exchanges divided by the actual world production of physical silver in ounces. Okay? That's how many paper ounces are traded along with 1 physical ounce of silver on the world markets. Okay? The world production, all right? All right, same thing with gold. And paper to gold ratio of the number of paper of gold ounces traded on the major world gold exchanges divided by the actual world production of gold in ounces. Guys, this is the biggest sham ever. Biggest sham ever. While we go over $24 trillion in debt, not bringing in a lot of cash, the ticker for COVID-19 victims is running, and the stock market closed up 700 points today. Even gold, even oil's getting in on the action right now. It's amazing. All right, guys, just hanging in there. Just a quick update to let you know that there's all kinds of mathematical shenanigans going on. Derivatives are blowing up in the back. Let's take a look at these derivatives here. Okay. Currency derivatives, that's $675 trillion of derivatives and climbing. All right. These are insurance policies for banks that have a lot of outstanding junk debt. And that's not going anywhere anytime soon. All right. Silver 5150 out. We'll see you this afternoon with a very special show.